All right, welcome to another week. Today we're going to do a quick check-in on how we are performing to October goals and already to November goals. And I want to come back a little bit to risk management, some things that I looked at this week that's going to alter my strategy pretty significantly. And then, of course, we'll take a quick look at the charts at all our different positions and go from there. So we hope to keep it meaningful today. And, of course, before we get started, if you wouldn't mind subscribing if you're interested in following this journey. If you don't know what journey I'm talking about, you can check out the video that's going to flash right there real quick. Basically, I'm using options to try and replace my corporate income. And if you could like these videos as well, that helps out a lot. It sends them a little bit further. And I'm just going to be incredibly transparently honest. Maybe this channel turns into something. Eventually, it's another income stream, right? And that's part of my risk management anyway that we'll get into in the future is multiple income streams. So just taking a quick look at the account, we're still overall up around $3,900 since we started this journey, but from last week we're actually down about $1,100. If you follow the market, you'll see we had a pretty decent pullback yesterday. Looks like it's mostly recovered, but that did impact some of the index funds that I have that don't show the balance of the recovery until the next day. So and I'm recording this during the day on Thursday, so the market's open right now. So if the market was closed, my index funds would represent the gain for today. So this is probably actually maybe even about neutral. I'm not really sure. I don't know how much today's recovery represents in those index funds. So all in all, a good week and a busy week. So we sold 4 new cash secured puts, and also we sold 4 covered calls. And I'm going to start listing the premiums that were collected. And these premiums right here actually put me over my October goal, which is really good. And then we'll take a quick look at November, where we are almost hitting goal already. So all in all, great week. And the details of this, or you can see for October, our plan was to see about a 3% targeted gain. And we are currently sitting at around a little bit above 3%, so exceeded the goal. And I don't really expect much more to come in for October. I don't really see any of my positions closing early, which that would then pull them in from when I want to realize them in November into October. Don't have a ton of cash secured puts that I want to close early right now. So this is probably set, although I could potentially make another covered call. But right now, we're just going to go ahead and roll with this. And as you can see for November, we are basically almost hitting goal already. So November, we step it up a little bit. We're going to be targeting a little bit more capital in this, but a lot of the actions that we've done already in October that are going to materialize in November perform pretty well. So again, we wanted to make around $5,500 in income, and looks like we're already sitting around $4,500. Again, this could go up or down. This could certainly go down if I close any cash secured puts early and take a little bit less of that initial premium. But this could also go up substantially as my cash secured puts either get assigned, or if they get assigned, and then I roll those into a covered call. So you can see on the covered call line item, I don't even have any gains at all yet for November. So that's complete upside. And we'll bounce back to risk management here in a second. Let's just take a quick look at the charts. Also, you'll see a bunch of big changes that I've made in Thinkorswim. Actually, I called Charles Schwab, and they're really, really good about just walking you through how to set up their platform. I've always known through my mentor that it is one of the most powerful trading platforms out there, but it's just so feature rich. It's really difficult to use until you get the hang of it. So if we go through these real quick, you'll see SoFi. SoFi started to pull back, but it looks like, again, the market's having a great day, so it's just recovering. And all these cash secured puts still look good. None of them look like so far they're going to get assigned. SMR, this is an interesting one. This one was dropping. I actually put the next support level, and if it dropped below this, I think it would have kept falling. But today it's pulling up a little bit. And again, remember, we have a covered call. We were hoping for this to get about to $45, and it actually got to $45. But it dropped, so that's okay. This probably won't get assigned to someone else, and I'll just go ahead and roll this covered call over again and collect the premium. And these other cash secured puts, you could see that the one that was at 38 and 35 was a pretty good chance I was going to get assigned those had the stock stayed down, but we still got plenty of time. These are all the way out in November, so plenty of action to see what happens with those. BMNR, same story. It's hovering right around my strike price, but still a long way to go. So nothing to do with that one other than watch. PSIX is the one where we really have a ton of action. And this one was just dropping, dropping, dropping. But again, it looks like it's maybe potentially turning a little bit with the rest of the market. But if it stays around here, and it may even create a new Bollinger Band at this level, none of these covered calls will get assigned, but I collected all the premiums for these, and once these covered calls expire, I'll just start a brand new covered call. And these are all in November, so they're either going to materialize and I'll get a pretty big gain. I did these at 15, 20, and 25% gains or something like that. So I'll either get the realization of those gains, or I'll start over with a covered call and get the premiums. The November number is going to go up more than it is now. So I should exceed my goal in November, no problem. And along the way, I'll probably may get assigned another 100 shares of these. That would put me at 400 shares of PSIX, and that's going to be pretty heavy in this position. Not really what I want it to be, but this one plays really good premiums, but I am going to probably start cover calling my way out of this just to reduce that position a little bit. Looking at VST, that one again was dropping as well, but it looks like it's turning around with the market, and we'll see what this brings. We got a couple more weeks for that one. AMSC, same story. Pretty much everything is the same story. I don't need to drill into all of these, but we've just got time. We'll just keep watching them. The only thing you'll see really different from last week is I've started adding support levels. So what I mean by a support level, if I back up a little bit, what I do is when the stock starts to drop, I kind of go back and look at the charts a little bit. So let me switch my chart to a 1 year, 1 day, and you can start to see. If I zoom back in a little bit, you can start to see where the stock created these support levels. So ideally when the stock is going down, you want to see where it's going to hit, because if it drops below that support level, pretty good chance it's going to go to the next support level, which could be down here, or it could be, unfortunately, could be way back here. So that's why I put those as the market was just dropping and dropping yesterday. Looking at Palantir, we're in really good position here. And looking at Rocket, this is our one where we was hoping to get this bounce off of this, and that is exactly how it played out. We bought right at this indecision candle, which is a doji, and it's been climbing, 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 climbing. Ideally, it gets above 19 by October 31st. And it hits my covered call, and I'd get around a 17 or 18% gain on that. But even if it doesn't, that's okay. I'll roll that covered call into another one. And I did do some more cash secured puts on these, and you can see it's running away from those. So we're in real good shape on Rocket. On Serve, same thing, just watching. Amazon, this is our leap. We want Amazon to go 240, 250, 260 range, because the contract that I have for that will get significantly higher in value. So that's why I didn't put any target here on the chart. I may do that next time, but this leap that we bought is for like 2 years out. So I'll get into leaps another day. I'm not comfortable with them yet. My mentor yesterday made about $5,000 executing some leaps on the downturn. And that's kind of where people are really multiplying their money, is on these leaps, on these big downturns. But I'm not there yet. So right now I got one and just watching it. And part of this next journey is just to start learning leaps and get good at those as well. Western Digital, same thing. STX, same thing. And here's a new position that we picked up for a company called Fiserv. We had some shares in this, and we did a covered call against this. You can see Fiserv's just been turning down, 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 but it bounced a little bit. So I went ahead and did a covered call pretty high. I mean, this is, when I did this covered call, it was at like 120, 121. I set this all the way for 140. And I did it for right after earnings. And the reason I'm playing that is I'm trying to see if Fiserv will blow it out the water in earnings, and potentially this goes up pretty decently, and then I get to get a pretty good realization on this covered call. And if it expires, I'll just roll this all over again based upon where they're at. And that's it for the charts. Jump back into risk management real quick. So the thing I really wanted to cover here in risk management, and get over to my notes, I did some pretty detailed research on all the crashes. This was at the advice of my mentor. And there's a big reason for this. One of the big things that I've been trying to figure out is how to ride out a market downturn and potentially how long they could be. So what better way to figure that out than to go study all the crashes? So I'm not going to bore you with all the details, but I just used the charts and went through the data and then kind of chat GPT'd what was happening around then. But no secret here. I didn't even have to Google this one. Year 2000, that was the big .com bubble. And the market dropped around 60% over the course of 2 years. And it took 4 years and 3 months for it to recover. And what I mean by recover is get back to the same level it was when it started dropping. But there's a lot of money to be made on the way up. So that 4 years of recovery doesn't necessarily bother me so much. It's the time it took for this to do that. It took 2 years for this to fully hit the bottom. And it's hard to make money on the way down if a lot of your positions are assigned. So the next big one was the crash of year 2007, and that was the whole financial crisis with the risky loan mortgages. And again, the market dropped around 55%. This one was a little faster. It was a year and 4 months exactly. And then it took around 3 years and 4 months with a couple pullbacks around 14 and 17% separately for it to fully recover. Again, you can make a lot of money on the way up on the market, especially if you have cash sitting waiting. You could quadruple your money on the way up if you are doing really good leaps, or if you're just buying and holding really good shares that plummeted, that are recovering. So I'm not so worried about the recovery time frame. It's how long did this take to happen? And this was a year and 4 months. Then the next really big one was COVID. This dropped around 31%, and it was literally in 1 month. And it recovered in around 3 months. We all remember that. It was a flash sell-off and then quickly recovered. And then the next one in 2022 was it was during the last administration's term. There was a few different things that came up. The war starting, raising interest rates to stave off some inflation. Inflation continued to climb. Anyway, it just a culmination of events. Basically, the market dropped 25% over the course of 9 months. And it took about a year and a half to recover with about a 10% pullback along the way. But all in all, 9 months is not that bad. And then finally, the most recent one was about an 8 to 10% drop when Trump announced the tariff issue, and then it sharply recovered in about 2 months. And a lot of people that I follow made a lot of money off of that because they were ready for that big drop. So kind of my synopsis here is we're not really going to be able to plan for a catastrophic event. If another 1 to 2 year massive 50-60% pullback happens, look, I'm going to have bigger problems. There's going to be so many layoffs. Like the economy is going to be in a tank. There's going to be significant issues. So, we're all going to have issues anyway. And the best just to have a ton of cash then. But we should expect 5 to 8% pullbacks 2 to 3 times a year. And that's when you can make the big money. Because if you're sitting on cash, when it's going to recover, and it's going to recover either 5 to 8%, or potentially it could recover and jump back up 10 or 12%. Along that way up is when you can make some pretty substantial money in leaps if you're following the right stocks. So with this is kind of really changing my strategy, is I have to really be focused on disciplined cash investments. So what this has done for me this week is changed my thinking on my strategy. I feel like I need around 20 to 25% of cash at all times. And it's been dang near impossible for me to do that. So I'm starting to play around with some different ideas. For me, the biggest thing is I hate sitting on cash that just earns no money. So after doing a lot of thinking, I think there's maybe a way to do some 10 delta, 15 delta, 20 deltas. Basically, the lower the delta, the safer the option is. So it really comes down to its percentages. If you just hold cash, the best I can do is about 4% annually and just put it in a money market fund. But if I do this strategy and I only get 0.5%, the lowest deltas I can find, 0.5% is still around a 6% return. Or if I went for around 1%, that's around a 12% return. Now, I know what you're thinking. Well, hey, doesn't the S&P just give you 1% on average? Yes, it does. But the problem with the S&P, and I just moved all that cash sitting into the S&P, and I actually rethinking that decision. I think I might liquidate all that back, and that whole 25,000 and go right back into cash, is because if the S&P is going to drop too, I mean, it's just a culmination of the 500 biggest stocks in the U.S. market. So if we have a massive, massive pullback, my cash account that I've considered safe is basically, I can't use it because I would be pulling from an account that's significantly down to go put into an options account to try and make big money off of. It just doesn't make any sense. So what I'm thinking is I'm going to pull all that cash right back out of the S&P fund while it's up. And I'm going to try this other strategy and see how that works on some smaller amounts. But for me, just having big amounts of cash is going to be the most important because the market is going to pull back. Yesterday was a perfect example. It pulled back about 3%. It recovered back up to only 1% down, but it went all the way down to 3%. And I wasn't, and I'm pretty heavily invested right now, and I didn't have a lot of cash sitting on the sidelines. I'm not including my income account or severance account. I'm not including that. That's a no touch account. So yesterday I couldn't take advantage of a bunch of good trade opportunities like my mentor did. So that's one thing that doing this study on the market crashes kind of really gave me some insight on is I really just need to treat this like a normal job, to have 3 to 6 months of pure cash emergency fund just sitting on the sidelines doing nothing. And so that's what I'm going to start doing, and we'll do that over the course of the next few weeks. And that's about it for this week. So if you've hung around this long, I appreciate it. I hope you enjoy it and getting some value out of these, just watching a super average investor learn the ropes of options and just learn how to try and make a living this way, and just making some mistakes along the way, but also hitting some very realistic goals, which is obviously important. So that's it. And I'll catch up with you next week. Thanks for tuning in. You guys have a great weekend.